Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else.
Friends, welcome to another video on profit and equities. In this video, we'll be talking about 3 stock ideas from Anand Rathi, which they believe present a very good risk reward after the current fall in the markets. Also friends, if you think you are benefited by the content that you see on our channel, please don't forget to share these videos. This helps the channel grow and motivates us to create more such content for you in the future. Please watch this video to know more. Now the first stock on the list is Speedlite Industries Limited, which is available at Rs 1076.70 and the face value for it is 1. The target price here has been set at Rs 1345.00. The symbol for it is PIDILITIND. Now Speedlite Industries Limited has a leadership status in adhesives and sealants with products like Fevicol, Fevikwik, M-Seal, etc. Now this is now eyeing a similar position in waterproofing and flooring business, which is currently very small, that is only 5% of revenues as compared to its traditional businesses. Its key brands in this segment includes Dr. Fixit and Roff. Now it reported a growth of 19.8% in its consolidated revenues to Rs 18,483 million in Q3 FY19. The operating performance of the company declined primarily due to higher raw material inflation and increased advertising and sales promotion expenses. The profit after tax margins of the company stood at 11.8% in Q3 FY19 as against 15.4% in the same quarter of previous year. On segment basis, net sales of consumer and Bazaar segment grew by 17.3% in Q3 FY19. Overall, the company continues to report higher than market volume growth and in turn is gaining market share in its key product categories like adhesives and sealants and construction chemicals. However, on margins front, Anand Rathi continues to watch volatility in key raw material prices. The recent decline in oil prices and moderation in volatility going ahead should add positively to the company in near term as compared to the current quarter. They continue to remain positive on the company and maintain their buy rating on the stock with a target price of Rs 1345 per share. Now the second stock on the list is ECL Technologies Limited, which is available at Rs 1066.15 and the face value for it is 2. The target price here has been set at Rs 1182.00. The symbol for it is ACLTECH. Now the company reported good set of numbers for the quarter under review. Revenue from operations improved by 22.6% year-on-year, mainly led by better performance in Europe followed by North America. Among verticals, telecommunications and media and retail and CPG led the growth. On profitability front, EBITDA from operations for the quarter improved by 30.2% year-on-year at Rs 36,320 million with a margin of 23.1%. The company achieved the reported PAT of Rs 26,050 million at a growth of 25.5% year-on-year with a net margin of 16.6%, translating into an EPS of Rs 19.1 per share. Also, the company signed 17 transformational deals during the quarter for another straight quarter, driven by financial services, technology and services, and also manufacturing. The company said bookings in 9 months of FY19 were 40% higher than 9 months of FY18. Qualified deal pipeline is very healthy and is at record levels. With continuity of robust growth across Mode 2 and Mode 3 businesses and target of 40% of revenue over medium to long term along with limited on-site risk, Anand Rathi expects the growth momentum to continue in the near term, supported by strong deal pipeline and ramp up of large deals. They maintain a buy rating on the stock with a target price of Rs 1182 per share. Now the third stock on the list is Larsen Toubro Limited, which is available at Rs 1280.35 and the face value for it is 2. The target price here has been set at Rs 1894. The symbol for it is LT. Now Larsen Toubro Limited has reported a growth of 24.2% in its consolidated revenues in Q3 FY19. The growth in revenues was driven primarily by better execution in infrastructure segment, persistent growth in hydrocarbon segment and services business. On profitability front, the company's consolidated operating margins stood at 16.7% in Q3 FY19 as against 16.2% at Rs 46,699 million in Q3 FY18. This is an improvement of close to 50 basis points. The improvement in profitability was driven mainly by services and realty businesses. In terms of order book, the company's unexecuted order book stood at Rs 2,840 billion as of December 2018, of which share of domestic order book stood at 79.2%. During the quarter, LT has received orders worth Rs 422 billion, a marginal degrowth of 12% over same quarter previous year. The new orders continues to be predominantly led by public sector, while private sector continues to remain muted. In terms of growth outlook, the management has maintained its earlier guidance for a growth of 10% to 12% in orders, while on revenue front, it maintains a growth target of around 15%. In terms of profitability, the management has guided for sustained improvement in margins within a range of around 50 basis points. Going ahead, Anand Rathi expects the company to continue to gradually improve its performance in medium term, and revenues from infrastructure segment should continue to improve on better execution pace. There is also expected to witness better traction in its other key segments, including defense business segment. Anand Rathi has incorporated the latest numbers to their model for the company and continues to remain positive for the company. They maintain their buy rating on the stock with a target price of Rs 1,894 per share. Now friends, please don't consider these to be recommendations on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended to be a piece of news. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.